Hello everybody and welcome to a discussion of the TrendSpider use case bottom fishing in Apple on March 8, 2024 using the TC blast indicator. Please review our disclaimer at your convenience. Just a reminder that past performance is not necessarily indicative of future results and there's always risk of loss in trading. What is blast? Blast is buying low with an adaptive stop. So the blast indicator provides both an entry trigger and a trailing stop. So a high, close or low above the trigger line after a sell-off implies a potential trend reversal to the upside. Remember that disciplined risk control is essential to the success of the strategy because the prior downtrend could resume. This is a daily chart for Apple starting in November, December 21 through March of 24. I've drawn a line near the support of the lows in October of 23. And since the peak in July, Apple has essentially gone sideways and now seems to be testing the bottom of the range. So the question is, will Apple bounce in this area? And is there a tool we can use to simplify or assist our decision making? So the tool we're using is the blast indicator. The blast has a trigger line and a trailing stop line. So whenever there's a high, close or low above the trigger line, you have a potential entry condition, and then you play defense by using the trailing stop as your exit point because the downtrend can resume. So in this chart, you can imagine that there was a potential entry in this area and a stop out here, or a re-entry here and a stop out here, an entry there and a stop out there, an entry here and a stop out there. So this is a signature of the blast indicator where it provides a succession of losing entries within a strong downtrend. So now we are approaching another potential reversal area. So we need to see price action above the trigger line to give us some kind of confirmation for a potential entry. This chart summarizes one possible test of the blast indicator. So here we are requiring that the low be above the trigger line and we are buying at the open of the next bar. So this is an example of a trade that succeeded. We got in here, we had a very nice follow through and we exited there. But this is a trade that upon re-entry got stopped out over there. And as we discussed in the previous slide, you could have an entry here with a stop out there, an entry there with a stop out there, and so on. This is the long-term summary of the TC blast indicator tested on Apple going back about 3,000 candles. And I will separate these two charts next for a closer look. Here we can see that the blast approach generated 91 positions across about 12 years of data with a mean return of say 2.6%, and the spread gives you a general idea that the trading itself can be noisy because it depends on how much of a follow through we can get from the rebound in Apple. Here we see the long-term equity curve for the simple test. About 51% of the trades were profitable. The risk-reward ratio was 2.31, which is pretty good. And of course, you have to manage your drawdowns, as I've said multiple times, because the prior downtrend can resume. So just to revise again, Apple is now approaching some intermediate or long-term support with a potential for rebound. We're using the blast trigger line to give us a sense for whether we should enter or not, and then we'll use a trailing stop as our backup in case we are wrong. So to summarize the blast use case for Apple, Apple is likely to bounce soon, quote, but the extent of the follow through is uncertain as usual. Blast can provide a template for trading decisions, but remember that excellent risk control is essential for the success of the strategy. Thank you for watching.